Boom! What's up, Waves Capital? It's Royce Jacob, and welcome back to the channel. In this video, I want to talk to you about C3 AI Inc. and why I believe it's almost time for another rally to new highs following the recent correction we've experienced. Okay, so we will, of course, be talking technicals and diving into the charts on TradingView. We'll kick it off by taking a look at 15-minute candles so I can discuss my short-term thoughts with you guys. And then we'll zoom out, go back a little bit, take a look at daily candles, and we'll focus on the bigger picture and our upside price targets for good old WAVE2. Okay, but before we talk price targets and before we discuss the technicals, I feel that it's important for us to remind ourselves of the psychological stages of the hype cycle so that we can understand why we experienced this correction over the past week. And, it also acts as a reminder of what we should keep an eye out for once Wave 2 comes. Okay, so let's just kick it off by reading over this. I do also want to read over my most recent take on C3 AI in my most recent newsletter, just to preface the analysis that we'll dive into in real time. Okay, so let's get to reading. For full transparency, this newsletter was from February 6th, so Monday of this past week. And as we all know by now, this thesis played out pretty damn well. Okay, so I'm grateful for these gains, and I'm even more grateful to know that we're all winning together. And this 100% applies for Wave 2 as well, so hopefully you guys are riding with me. That said, it's extremely important that we continue to act rationally and be extremely mindful of the psychological phases of a hype cycle. As far as Wave 1 of this AI hype cycle is concerned, we're quickly approaching the peak of inflated expectations. Okay, so before we get to reading further, let's quickly take a look at each of these psychological stages of the hype cycle, represented nicely by some cheesy emojis. Okay, so 1, the technology trigger, or the early adopters like ourselves, those who are early to the trend and get in early, establish those call options that are now worth tens of dollars while they're cents. Okay, so early adopters or the technology trigger, boom, from there, you reach the peak of inflated expectations. And as we know, this can happen very, very fast. Okay, so we have reached the peak of inflated expectations. And once again, before we move forward, I don't think it's over, but the exact same psychological cues do apply for Wave 2 as well. And really, in all honesty, we're still kind of in the early adopter phase because, again, the hype is young. Retail investors, for the most part, really haven't dived into this a whole lot just yet. A lot of hedge funds and institutions have been taking part, but really what's gonna set this off for good and the driver of Wave 2 to new highs is that retail flood. Okay, and I'm not saying that there aren't retail investors involved with Wave 1 and kind of the rally that we've seen. There definitely are, but just to round it out right here, you guys, it's still early, so keep that in mind. So peak of inflated expectations. Up here is also where those early adopters who have made crazy profits on our call options or even common shares, if you guys have been holding either, you're doing well. So regardless, the early adopters are going to begin taking profits around this manic phase when we reach crazy highs, as we discussed in my last video. It was a while ago, but as we discussed in the last video, we were looking very, very oversold, which is why I believe the correction was impending. Okay, so again, we got overbought is what I meant. So we were becoming extremely overbought. Again, emotion was getting involved. Manic activity was becoming involved. We saw that in the extreme volume that C3 AI has been displaying over the past couple of weeks now, or a week or so. So again, we reached that manic phase of Wave 1. We began selling off. Those who got in up here panicked because, they thought the party was over. They began to sell, which creates that snowball effect that leads us further down into the trough of disillusionment, which is usually where we plateau. And, kind of what we saw today, I think, was a plateau. Not to say that we couldn't fall any further, but when we start seeing the sideways price action, kind of like what we've seen over the past session or two, that's a good sign, you guys. Okay, so again, after that, we reach the slope of enlightenment and then plateau of productivity. So again, you fall down hard. I guess right now what we're going to see probably over the coming sessions, because in all honesty, you guys, I don't think personally that we're just going to start ripping once again. I do think that will probably go, sideways, maybe even a little down for another session or two prior to starting that, again, slope of enlightenment, plateau of productivity once again. And then after the plateau of productivity, that's when the second wave comes. So because this is happening fast, the hype cycle is almost fractal. I was trying to figure out how I wanted to say this. It's almost fractal because you can look at hype cycles like when you look at just Bitcoin, the easiest example of a hype cycle. And you really zoom out and you look at the past 3, 5, 10 years, what these two wave patterns that we've coined over here, because we trade hype cycles. This is our game. Waves Capital thrives in this environment and hype cycles like this. But when you zoom out on a hype cycle, again, on a multi-year time horizon or time frame, and when you zoom in on it, when we're looking at it, we can even use 15 candles. We won't do that right now, but even on, 4-hour candles on like the time horizon of a couple of weeks to maybe even a couple of months, depending upon how long this hype cycle plays out, they all look the same. And it's important to remember that, again, when you read charts, even all the technical analysis we do, there is a fundamental side to this in the sense that when you're looking at a chart, this is pretty much just psychology printed. It's visualized psychology, and that's why the principles of this hype cycle play out so well, and why I initially created the two-wave pattern or two-wave theory. Years ago at this point, is because I've played hype cycles, and that's how I've accumulated the majority of my wealth. So, again, it's extremely important to understand the psychological aspects of the hype cycle. I hope you guys understand this, and I'll read over this, and then we'll just dive straight into AI. Okay, so over a week into the rally. Now, keep in mind, you guys, once again, this was on February 6th, so right before the correction started. And historically, this is typically when we begin to experience a short-term top. The FOMO has set in. The retail audience / average Joes have taken notice. Once again, I just said not all the retail Joes have gotten in, but there definitely are retail investors involved in this. I don't want to discount that, but there's plenty more out there. The retail audience / average Joes have taken notice, and the early adopters like ourselves will continue to take profits. As I said last week, I definitely don't believe that the party is over just yet, but I think that we need to take a breather and rest up for Wave 2, which once again panned out well, because that's kind of exactly what ended up playing out the rest of the week. Okay, and that's all right, because it gave us opportunities to pick up some great call options, or even more shares. Just add to your common share stack if you're not trading options. We entered what I call the bag of big range. I've been talking about that in the newsletter every day this week, and today we had that opportunity and we took advantage. So I want to read my take on C3 from this morning's newsletter, recording this on February 10th. Whenever you're watching this, it could apply definitely for the rest of the weekend, but even until next week. And just gives you some insight as to how I trade. So this is from this morning's Price Targets newsletter, where I break down charts. These are the ones I featured today. So C3 has officially entered my bag of big range, and I'm glad we had some fresh profits to deploy today. And you guys, this is why I hedge. I talk about puts. When you're getting overextended in the entire market, hold puts. Personally, I had a lot of Tesla put options because we were getting overextended and very overbought on the charts. And today, those put options over doubled in value, and I was able to take meaningful profits from those puts and capitalize on some of the positions you see here while they were down. And that is kind of the best feeling in being a trader, is not just a runner just continuing to run, to be honest, but it's making a tactical trade like this and being correct, and taking advantage of what I believe will be another wave up for some of these gems. Okay, so although it's always possible that we fall lower in the short term, keep that in mind, you guys. I don't want to discount the fact that we could fall lower. I just stated that. I'm comfortable purchasing longer term calls in the range because I know that Wave 2 will, or at least should, carry us much further than Wave 1. AI has experienced a 30% pullback from its recent high on February 6th, so we can just actually reference that real quick. You can see from the high here, February 6th at just under $31 to the low here, actually just earlier today at the time of recording. That is almost exactly a 30% correction, okay, pretty much on the dot. And as we'll read right here, this is a standard attribute of our two-wave pattern, or once again, of the hype cycles that I've played in the past. I was going to bring up some other hype cycles to reference, but I didn't feel it was necessary. Go look at Bitcoin, go look at your favorite hype cycle asset that we've talked about over the past couple of years. It's all the same, but I just figured I'd sum it up for you guys and say that 30% from the recent high or the local high, that's very standard in a hype cycle correction. And again, maybe we fall 35, 40% from the top, but around the 30% region is where I'm personally very, very comfortable buying for what I believe will be another wave or another rally to new highs. All right. So in my eyes, this is clearly a correction as opposed to a crash. As we've corrected, AI has printed a descending channel pattern. This should give us a pretty clear indication of when wave 2 is here. Once the top line of resistance on this channel is broken, we are riding. My target for the second wave remains AI's IPO price of $42. So, little spoiler there. Honestly, you can close out the video now if you want. But from where we stand, that's roughly a 2x. And patience and discipline will continue to pay off. So let's keep the gains coming, team. All right. So we will dive into the charts. But first, you guys, if you are not officially a part of the trading team yet, if you're not a part of Waves Capital, the daily newsletter, the complete portfolio program, then consider checking it out. It's the first link in the description box. My complete portfolio daily newsletter. Didn't mean to zoom in, but I guess that worked for a dramatic effect. But you guys, this is $15 a month, $40 for every 3 months. Try it free for 7 days. And if you don't like it, you can always peace out. But for you guys, I trust that you will not regret your decision just to try it out. This past year, again, in the options portfolio, we are up over 15x. I've kind of lost track at this point, to be honest. But we were up well over 10x, very safely up over 10x in the options portfolio. And again, you guys, it just helps to be prepared and sticking to your game plan and, staying resilient. Sometimes that's what the newsletter's focused around is resilience and just keeping a cool and rational mind while, you're dealing with roller coasters of emotion and price action. Okay. So again, you guys, if you want to know how I'm personally trading on a daily basis, if you want to join Waves Capital, then that's the first link down below. Appreciate it if you guys check it out. Also appreciate any existing members dropping a comment below, letting other potential members know your experience here. And I just appreciate you guys. And really a pleasure to be riding with you all. Okay, so plug out of the way. Let's dive into AI. Okay, so as I just said, you guys can see here again, 30% correction, very, very clean. We'll kick it off short-term, 15-minute candles, as you can see up here. Discuss the short-term very quick, what I think will initiate wave 2. And then, we'll discuss the second wave and where I think we're going. I already kind of spoiled that, but, we'll discuss it anyway. So, over the past week, once again, from AI's high at broke the $30 range, which is crazy. Broke above $30. AI really, really even exceeding my own expectations, which, I couldn't be happier about. But has corrected over the past week. And once again, from the high we saw on February 6th, right as I sent out this hype newsletter talking about how a pullback seemed pretty inevitable. Since that, we did correct 30%, and it looks like we did plateau today. And as you can see here, even though pretty much the entirety of the markets saw red today, AI was one of the few names that closed the day in the green. So that's awesome. But from here, when it comes to the short term, as we've corrected, AI has once again printed this descending channel pattern, these two yellow perpendicular lines creating that short-term descending channel. What I think happens from here is obviously a run up to test the top line of resistance on this ascending channel. You could draw it here, but as you guys know, I like being a little more conservative with my trend lines and at least requiring at least two, or preferably more, but at least 2 touch points on the channel. Honestly, this is the safest bet right here because we're using like 3 candle wicks, but we'll call this the channel right here. Okay, so to test the top line of resistance on this channel, even if this happens at the beginning of next week, next Monday, that would be a 7% climb to the upside. But hey, maybe it's a little later. Maybe the further this extends, of course, the lower the price target on this channel gets. But I do think it's very, very possible that we see this on Monday. Again, maybe we come lower. Maybe we test support once again. But ultimately, when I think wave 2 is coming, or what will be a great indicator to us of wave 2, is a break of resistance on this line, a break of this line of resistance on this descending channel. There we go. So once this trend line is broken, once this descending channel is broken, again, maybe we see a pop following the break, just a short term, all the traders getting in there, catching the pop. Maybe we go sideways for a bit, take it a little slow. Once again, hit that plateau of productivity before the next trigger or something else happens to engage that second wave to pneumatic highs. Okay, so keep your eyes on this, guys. Again, these are sticky figure trend lines, but they are very accurate. So I do encourage all of you to go into TradingView for yourself, mess around, draw these trend lines for yourself, because especially the longer you've been in this game, the more you realize how freaking accurate these are. That's honestly why I don't even use moving averages. Like for the first few years of my trading career, I used moving averages, but once I understood that trend lines worked way better and were actually more accurate, that's when I stopped using moving averages. For any of you who have maybe been wondering that or are new to the channel, because I've explained that before, but it's been a while. Anyway, let's zoom out and close out the week, head into the new week, depending upon when you guys are watching this, and talk about some other price targets, okay? So, once again, let's get rid of that, and I'll explain that as well, actually, because $18, I do still think $18 is possible. I don't know if it's likely. If the greater market's absolutely, like, you know, the bed, then it's very possible that we see $18 once again. That is the top line of my initial gap range right here. That was my original C3 AI target. It is also the line of prior resistance on the megaphone channel that really initiated the parabolic, another even more parabolic move at following the breakout. So these do align over here. Worst case scenario for AI is $18. If we see $18, I am going ballistic with buying call options if we see $18 to $20. But I do think it's possible. I don't want to discount that possibility. But once again, a 30% correction for historical hype cycles is what I want to see as a trader when it comes to potential wave 2 targets. So again, maybe we come down further. Maybe we go sideways for a little bit, which is what I do want to see. I want to see that sideways price action prior to wave 2 to new highs. Okay, so sorry this is a little congested, you guys. I've been talking about the short term in the newsletter a lot, but we've had a successful wave 1. Again, that was a success. We took so many profits over the past week and life-changing gains were made. So now we focus on reestablishing our positions, using put profits to build up. I just got distracted, honestly. I was looking down here, saw that volume. So let's quickly take a look at this volume. And again, you guys, just looking at this volume, it is nothing like any volume that C3 AI has seen before. Even when it was reaching, it saw its all-time high of $185. So it's important to remember that that is C3 AI's all-time high. It's a freaking $185. And even after this rally, we've only seen $30. But you guys, the volume here is crazy. And again, the volume speaks dividends and is such a strong testament to the fact that this is a hype cycle. And, you know, again, the more eyeballs that are on this stock, the more attention that's on the stock, the more people see the price action. And, you know, human nature is you want money as easy as you possibly can get it. That's why people fall prey to the hype cycle and fall prey into that manic optimism, which, again, we take part in, but we are aware of, therefore we can rationally trade through it. That's what creates these hype cycles. And that's what creates valuations that make no sense and are honestly objectively irrational and stupid. But hey, we're still making money and we're traders. That's what we do, all right? We're not dreamers. I mean, I'm dreaming about the second wave, but at the end of the day, I'm a trader and I do my best to think rationally. So the second wave, again, typically greater than the first wave. From here, I do think that C3 will see at least its IPO price of $42. That also acts as the prior macro low on the overall downtrend that has not yet been retested. This came into play in October of 2021. So this is the previous macro cycle low. Once again, this low had not yet been retested in a very, very long time. So I do think this will come into play. Once again, this was also C3 AI's IPO price that was given to it by investment bankers whose job it is to correctly value a company. And you know what? You can argue what correct valuation is, but it's difficult to argue the fact that this will be a level that definitely comes into play. $42 IPO price. This is my wave 2 target. I will be taking significant profits for full transparency once this is achieved. And, you know, we could even climb much higher than that. It's, again, On opening day, C3 AI, although it was priced by investment bankers at $42, that was the technical IPO price. It opened at $100. So, is $100 possible? Given the fact that Google, Microsoft, the two largest companies in the world, are currently having a like World War III over this freaking sector and like the technology involved with AI, it's possible. Is triple digits possible for AI volume? Again, all the hype going on, it is. But again, it's important not to get greedy and keep your eyes on the prize. My short-term target, I should say, my WAVE2 target is currently $42. But of course, it could go much higher, and I will gladly adapt if it does. All right, so I appreciate you guys watching. Once again, I look forward to seeing you guys in Waves Capital for real. And have a great Super Bowl weekend, you guys. I'll talk to you next week. Until then, always remember, take action and make waves. Peace.